Good afternoon, everybody. Thanks for the nice introduction, and I'm very happy to be here today with you. My focus today is to give you an overview on digital transformation, why often those large programs fail. So a quick background on myself. I am the founder of Fintech Circle. We invest in fintech startups. So we are a global community, and we've got an angel network, and our goal is to find the best fintech startups which we can invest in early stage, and then help to grow those companies. And we also focus on education. So we've written a few books, to run courses, fintech masterclasses for banks. And we also do consulting projects to work on internal innovation strategies as well. And these are our books, so they are in 107 countries, many languages, and we will launch 3 more next year. One will be focused on payment, the whole payment sector. One is focused on artificial intelligence in finance, and one on legal tech, which is another growing vertical in the fintech sector. So the key thing what we see is that a large portion of companies are not really prepared for this new age we are living in. And it's about 40% of companies which are at risk of being displaced because they're not equipped for the digital future. And in order to be equipped, it's not an easy thing. There are 4 pillars relevant which we need as organizations to work on. Number 1, it's about the strategy and the vision, which is really key. So to make sure that the top management team, the board, the leadership team is bought in and understands what strategic vision the company follows. Number 2, it's about people and about culture, and how people need to be upskilled, how the culture supports innovation and entrepreneurship. So we call entrepreneurs. We all know entrepreneurs starting these startups, but entrepreneurs are these creative people who work inside your organizations, whom you don't want to lose, whom you want to keep, and whom you want to give opportunities to shine. So to encourage this culture. The third area of our 4 pillars is about process and governance, because to measure success and to define what key performance indicators should be in innovation, it's a different KPIs than what we have seen in the past. So we've got this new governance structure emerging. And only the last point is about technology. So that's, do you use big data analytics, do you use artificial intelligence, blockchain technologies, but it's not the driving force at all. The driving force really is the strategic goals you have got. And this picture was shown by a European bank at a large conference. And I don't know who knows which bank has got orange as their color. ING, exactly. It was the CEO of ING, and he said, we are this huge elephant. We are we're very slow, we are huge. It's difficult for us to change, but we know that behind us, we've got all these fintech startups running quickly, gaining market share. We want to actually work with them, and we want to collaborate, but we also want to become more agile. We want to be faster ourselves. And maybe some of you remember, 2007, the Forbes cover with the CEO of Nokia. And the title was, "Can anyone catch Nokia as a cell phone king?" And you all know what happened in 2007. You know what was invented? The iPhone, exactly. And he was being interviewed. What do you think about the iPhone? And he had this blind spot. He said, the iPhone, it's too expensive, it doesn't work properly, it's no risk for Nokia at all. And how wrong was he? And so the issue we have got is, when you look outside in the city here in London, in Canary Wharf, I would say most financial institutions go through so-called digital transformation programs. It's like everybody does it. But the risk is, or the concern is, that more than 70% of those programs fail. And that's millions, of pounds being wasted, and sometimes even more. And IMD, the business school, even says that 95% of these digital transformation programs fail. And that's a big issue. And I think the key thing is now, why do they fail and what can we do differently? And also, how could you help? How can your organizations help to ensure that if your customers or if you yourself in your own business go through such a program, that it doesn't fail, that you're one of the minority companies which succeed. So if you look at the first reason why digital transformation programs fail, it's because of a lack of leadership and lack of ownership at the most senior level. And what this means is that a company strategy obviously is owned, by the CEO of the company, and therefore also digital transformation must be owned by the CEO. So of course, there will be a chief innovation officer and there will be a chief strategy officer, but they must be backed up by the CEO and by the whole board to believe in this vision and who backing up, the people below them. And that's the reason why that's so important is because often, when you define the digital strategy, it's not just about what you say, but also what you do. What are the hidden messages you send? And if people in the organization realize this boss is so bought in, he bets on this basically, then you've got a much bigger success to succeed. And one of the issues, of course, we also fail is that most teams, most leaders in finance, are in their 40s, in their 50s. And we have studied 20 years ago or 30 years ago. And when we went to business school and to university, what we learned there were business models which nowadays are not anymore the domineering business models. We didn't learn about platform economics. We didn't understand how Google would make money, how Facebook would make money at some stage. So the gut feeling which the CEOs in banks or in insurance companies and financial services have got is not the gut feeling which helps them nowadays to get those decisions right in the digital economy. And so what's key is to start to be able to unlearn certain things and relearn others. So it's about, really personal competencies. What are the personal competencies with the largest innovation impact on innovation potential? And these are key things. When you look to hire people in your team, what should you hire for? And one is about risk taking. You need risk takers in your team who are able to take risks, of course, responsible risk and calculated risk, but people who are willing to do that. Then people who can empathize with customers. That's another key success criteria. Then idea integrators. You don't need necessarily people who talk all the time, but you want people who can integrate the best ideas from your team members and come up with a joint approach, a joint strategic response. And then you need people who are influencers. People who can influence people who do not work for them. Because it's very easy to influence people who have to do that because they work for you and you pay their salaries. But you need to be able to influence people who don't work for you. And you need to get them to do what you want them to do. So these personal influencing skills are really key. And the last one is result seekers. People who actually are able to not just prepare a PowerPoint slide deck, but who are able to put something into practice, roll out a new service, roll out a new product, at speed. These are the people you want to hire. These are have got the highest, innovation potential. So what's the second reason for failure? The second reason for failure in digital transformation is that often companies are focused too narrowly on just a new product or a new service, but don't look holistically at the whole portfolio. And when we think about a large organization, often it's about the business model which needs to change. The whole way of making money has to change, and not just a new product needs to be launched. So this very holistic approach is key, and to be able to reinvent one's business model, to learn from other business models and see what can we reinvent. What part of our value chain might become redundant, and we can cut this off and we don't need it anymore, and we introduce a new part in our value chain, we introduce new partners, a new approach. So that's also a very important reason. So not just to focus on one product, one service, but holistically look at the whole organization. And the reason why that's so important is because we're talking about different horizons. When we work on horizon 1, it's what we're doing now. What are the cash cows? What we are making money now? But in reality, some of those big winning product solutions, they will decline over time. So we need now to lay the seeds, the foundations for horizon 2. And even more so for horizon 3, which becomes relevant in 3-4 years' time. And so we need to do, on one side, we need to focus on money-earning business lines, but we need to grow the seeds for the ones who will be the money earners in the future, which is in a new environment, in a new digital, much more competitive environment. The third reason why digital transformation often fails is because lack of customer focus. That people forget, why are we doing those large programs? And the key answer always must be because it has to be better for our customers. And this might be B2C customers, B2B customers, but it's key that we don't forget that. And our Fintech Circle Institute, we did a study. We wanted to find out how many people are bluffing in the financial sector. And it was surprising to see that 97% of people in financial services assume that their colleagues are bluffing, by being able to use words such as AI, blockchain, big data, but in reality, they actually don't know what it means. So there's a huge kind of something around us happening where everybody wants to be an expert in digital innovation, but few people are. And so often, there's lots of talk and smoke, but very little happens, and very little what the customer benefits from. And that's at the end of the day, what the bottom line matters is how the customer perceives value. And we need to create more value, with what we change in our organizations, because otherwise digital transformation is ticked off a success for the organization, but fails when it comes to turn revenues and increase the revenues and the competitive position long term. Number 4 is about ecosystems. It's about building an ecosystem. And McKinsey, for example, they say that in 2025, which is only in 6 years' time, 1/3 of all revenues will come from ecosystems. And so that's, again, an important fact to think about. Is your organization thinking already in ecosystems? Who are your partners? Whom are you working with? Have you got a fintech ecosystem? Do you work with, let's say, fintech startups who could help your own product development? Do you work with fintech scale-ups in the FX space who could help to become your distribution partners, your scaling up partners? Who are other channel partners you're working with? And sometimes it's about co-opetition. Sometimes there might be, like we've seen almost with Goldman Sachs and Apple, a tech giant and Apple working together, and a financial leader. They are competing, but they're also collaborating. So these models of co-opetition is important to be able to also define, where do you want to compete and where can you collaborate, and how you do structure those deals. And that's our Fintech Circle ecosystem, for example. So we have got 130,000 people whom we are working with in organizations worldwide. Many fintech startups, we invest in those companies as well, as I said before, scale-ups. We work with, the regulators. We work with the banks, insurance companies, the media. And all these stakeholders are important in your fintech strategy. And it's important to nourish those relationships because it helps you to launch new products and new solutions. And the last reason why digital transformation fails is often a lack of skills. And a lack of digital skills specifically. And I give you one example. We worked with one large bank, one of the leading banks in Europe, and their goal was to encourage entrepreneurship. They know that lots of innovative employees, they're leaving banking now to launch fintech startups, or they enter the fintech world by becoming members of the board, non-executive directors in fintech. And they said, we want to keep those best employees inside our bank, and we want to give them the opportunity to launch a fintech startup internally. So what they did, for example, they made a competition, a competition across Europe, looking for the most innovative employees who could develop new solutions for the bank. And then they gave those bankers 6 months sabbatical. And in these 6 months, they're fully employed in the bank. Fintech Circle, we came in and we worked with those teams to create new products, new solutions relevant for the bank, because the bankers, they've got the domain expertise and they knew the client needs, but they've never started a business before. They've never launched a new product before in their whole life. And so the biggest danger for the bank would have been to spend lots of money giving colleagues 6 months off, basically, and not having anything as a result out of it. So you want to make sure that the 6 months are spent very wisely. And the areas we worked on were prime brokerage solutions, wealth management solutions, risk management solutions. So really complicated offerings, and which were really very well received. But it comes back to skills, so what. And one of the things what we often say is skill development has to start both at the top level, and often board members and the C-level executives have no technology background. When we look at banks, often in the past, the CTO was always seen as a back office function, was a cost center. The CEO always came from the investment banking side, having the profit center, he became the CEO. And the technology was seen as a back office secondary function. But now what we see is that technology is a competitive advantage. And the more you understand digital and you understand what your strategic options are, the better your competitive position is going to be. And so there's lots of fintech masterclasses, relevant to train the board, to understand new business models, new applications of technologies. And the most practical solution is often that, you've got business lines, and it might be in each of your business as well, that you've got business lines where this 20-80% rule applies, where 20% of your customers generate 80% of your returns. I remember when I worked for Morgan Stanley, 7 years in asset management, we had certain funds, certain asset management products, but we had 20% of our customers generated 80% of our revenues. So these were our top customers, but then we had a tail of customers who were loss-making. And for this tail of customers, you've got two options. Either you off-board them, because they're loss-making, or you manage to lower your cost base. And that's, of course, what fintech can do now for you, And if you manage your cost base, instead of having, let's say, 40% of loss-making customers, you reduce it to just 20%. You just made 20% of your customers profitable, And that's what fintech nowadays can do. But you need to invest in your own fintech skills to ensure that your teams, your colleagues are able to understand how to work with fintech companies, how to develop solutions. And that's, where we run this fintech masterclass. We're developing online courses as well now to help it scale as well, to help our customers. And so the reason why change is so hard is, of course, because finance is an old industry. I won't go through those slides here, but it defines, what fintech is really all about. And it's really about structural change. It won't go away. It's not a short-term trend. It's a long-term structural change, which will benefit all of us because it will increase revenues. When we implement those solutions, it will protect the business. It's more protects you from a compliance point of view, risk management point of view, and it reduces costs. So it's almost a miracle solution. It can do everything at the same time. In terms of investments, just to let you know, globally, the biggest countries investing in fintech are China, the US, and the UK. So they're the biggest investments happening there. And the biggest deals the biggest deal was in China last year with Ant Financial, which got 14 billion, invested, which was a record deal, completely unheard of before. So that's what we see on the investment side. And so to summarize, really it's not about, who are the strongest companies who survive, but it's the one who are most adaptable to change. when you look at those companies, Kodak, Nokia, Blockbusters, these were huge brands at some stage. They did not survive because they could not adopt to change. And so with that, I thank you very much. I invite you all to join our FinTech Circle ecosystem. You can join us on LinkedIn. You can follow us on Twitter. We can also invite you to our events. We organize a China conference, for example, next year. So please get in touch, on LinkedIn. And I'm very happy to take any questions as well.
So you said that you worked in Morgan Stanley in the asset management sector. So maybe this wealth tech book is relevant to that. So how would you highlight that book? I mean, in sort of three key points.
Very good point.
I have never heard anyone talk about the wealth asset management industry. So
yes. Normally when people talk about wealth management, they talk about robo-advice. Robo-advice solutions, which is just one small element, of the whole investment management sector. It's only B2C. The robo-advisory solutions have got the big issue that client acquisition costs are so high. And the long-term revenue of the customer often is slower, which means your business model never can scale. You always will make money, you always lose money. But what we see, look at Morgan Stanley, look at the whole asset management sector, is that often you have got, when I think back at Morgan Stanley, our portfolio managers, what kept them up at night was when they underperformed the index. Because we were an active fund manager, we had to outperform the index to generate alpha to keep our jobs. Otherwise people would have bought the ETF instead. And if we would have had solutions at that time which could have helped us to outperform the index and generate alpha, we would have bought them immediately. Nowadays in fintech, in wealth tech, there are solutions on the market which help you to predict down days in the market. So you know that, let's say you are invested in IBM and there's a likelihood of 80% in the next 48 hours the stock will go down. And if you hold IBM, you can hedge your positions, for example. So there are very specific wealth tech solutions out there which allow you to generate better performance for your customers in your institutional portfolios as well. They do use AI, machine learning, pattern recognition. So this one company, which I referred to is called Algodynamics. It comes from Cambridge University and was initially developed to predict heart attacks. So they came from the medical field to predict heart attacks, and now they're predicting stock market movements. Any other questions? Everything clear? Perfect. No, thank you all very much for your time.